We often hear that men and women handle money differently, and it's usually framed in a pretty simplistic way, right? Men are the aggressive investors, and women are, too cautious. But what if that so-called caution isn't a weakness at all, but a strategic strength?
That's the exact conversation we need to be having. The old narrative is completely missing the point.
Okay, so let's start there. For a long time, our understanding of finance has really been shaped by a singular perspective. But new research is revealing that when it comes to money, men and women often approach it very differently. While men might lean towards higher risk, aggressive investments for growth, women typically exhibit a more conservative strategy, prioritizing stability and the long term preservation of capital. They also tend to view finances not just as a means to accumulate wealth, but as a tool to achieve crucial life and family goals, focusing heavily on long term planning and security.
Exactly, Mia. This isn't about being less ambitious, but rather a fundamental difference in how risk is perceived. Women's approach is often rooted in a desire for security, ensuring that their hard earned money is protected while still working towards those vital life goals.
So, David, this conservative approach, this prioritization of stability, what's the real world impact of that? Does it actually lead to better outcomes?
It's significant. This risk consciousness directly leads to more stable returns and a significantly lower likelihood of catastrophic losses. In a volatile market, a portfolio built for stability is far more resilient to those dramatic downturns. But it goes beyond just investments. That strong emphasis on security often translates into diligent budgeting and robust emergency savings, creating a vital safety net for the entire family. It's the financial equivalent of building your house on solid rock instead of shifting sand.
I see. So, while men might be chasing aggressive growth, women's focus on stability and long term security builds a more resilient financial foundation. That's a powerful insight into different investment philosophies. Now, you mentioned that women also view money through the lens of life and family goals. How does this holistic perspective become a strength in itself?
That's probably the biggest game changer. It shifts the entire conversation.
Building on that, a key strength is how women often view finances as a tool for achieving broader life and family goals. This holistic perspective means financial decisions are deeply integrated with overall life objectives, leading to greater financial well being. Furthermore, when women are financially empowered, they tend to reinvest in their communities, championing causes that benefit the collective and driving economic growth, while also showing a greater likelihood of consistent saving and timely loan repayment.
Absolutely. It's a shift from how much can I accumulate to what can this money do for my life and my values. This isn't just about personal accumulation, it's about leveraging financial resources to create a better future for themselves, their families, and their communities. When you see that happen on a large scale, you foster a more stable and equitable society.
It's fascinating how integrating financial decisions with life goals creates such a powerful ripple effect, benefiting not just individuals, but society at large. So, we've highlighted these strengths, but let's be realistic. What are the actual challenges women still face in this financial landscape?
Right? Because celebrating these strengths doesn't mean the playing field is level, it's far from it.
Despite these inherent strengths, women still confront significant hurdles. The persistent gender pay gap directly impacts their earning potential and ability to save. Compounding this, longer life expectancies mean their retirement savings need to stretch further, and career interruptions due to caregiving responsibilities can further widen these financial disparities. While societal norms can sometimes affect financial literacy, women are often more proactive in seeking advice and discussing money, which is a vital tool for overcoming these challenges.
These systemic issues are critical. We can't just tell women to invest better and ignore the fact that they're often starting with less. Addressing the pay gap and creating supportive structures for caregivers are not just about fairness. They are economic imperatives for unlocking women's full economic potential. And you're right to point out that proactive approach to seeking advice. It's a powerful counterbalance to any lingering confidence gaps that society might impose.
So, while the landscape presents challenges, women's proactive engagement and unique perspectives are key drivers for progress. It seems clear that recognizing and valuing these differences is not just about fairness, but about building a more inclusive and resilient financial future for everyone. David, this has been incredibly insightful. Before we finish, could you boil it down for us? What are the key takeaways people should remember from this conversation?
Of course. First, remember that a more conservative investment approach isn't about fear. It's about prioritizing stability and long-term capital preservation, which is a proven strategy for resilience. Second, women often excel at viewing finances as a tool to achieve real-life goals, which makes for much more effective holistic planning. Third, this approach directly contributes to greater financial stability through diligent budgeting, having emergency funds, and consistent saving habits. And finally, while we celebrate these strengths, we absolutely have to acknowledge and tackle the systemic challenges like the gender pay gap and the burden of caregiving. Ultimately, valuing these unique financial perspectives is a win for everyone, for individuals, families, and the entire economy.